All right, good morning, traders. This is Blake Morrow, and you are listening to the FACE webinar. We're not sure where Dale's at this morning. Usually he gives us a call or lets us know maybe he slept in. I'm
You
not
can't
too
call
sure where he's
somebody when
at.
you're sleeping.
What?
You
Or
can't call
sleeping in?
somebody when you're sleeping.
Yeah, right, right. I mean, more than likely what he did is he probably missed his alarm and he's sleeping because that's, if you look at my clock here, it's 5:01 and I've been up since 3:30. So, and I know he gets up early as well. So, I mean, it does happen from time to time where you miss your alarm and you sleep in because your body gives you the big middle finger and says, yeah, you're going to sleep in today. Anyway, so let's talk about first of all, let's talk a little bit about what's happening with the euro. So the euro is breaking higher, and we are above resistance. So what I'm actually staring at right now, and what I'm most concerned about at this moment, is this breakout point, which comes in right around 110.20. We're here, we're right where it's at, but I was talking with the guys in my office, and we were talking about, well, the EU Commission is issuing grants, not loans, and yet the euro, when this news came out at that point, and you can read like some of these the other stories. When that came out, the euro is trading below 110. All right, the euro rallied above 110, and we rallied to where we're currently at, now. And a lot of people were like, "Well, wait a second. This isn't. This is not a. This is a grant. It's not a loan. It has to be paid back. It's not really a union. But the fact of the matter is the euro is higher. And so I was talking to my office, and the guys in my office, they're like, it comes down to a point where, the European Union has now crossed a line. And that line is positive. And uh, um, you know, one of the gentlemen in our office is like, yeah, well, it kind of takes off the downside now, and kind of takes off the 105 or parity potential and puts 115 to 120 as possible in the euro now. So it takes a lot of, it's another step saying that the euro is not a an experiment. It's something that's going to continue on. So, whether it fails in the future or not, we'll see. But the fact of the matter is I think it is a positive development, and I think the market is seeing it as such. So where we close today is going to be really important. As I tweeted out a little bit earlier, we are above the 200-day moving average. So being at these levels, hold on really quick. Let me do something. All right. I just took some of that off the table. Okay. So, what was I going to say? So the euro, where it's at right now, as long as we close up at these levels, 110, we could very easily fail today. And the reason why I say that is because it's the euro, and we how many times have we been up here, and how many times have we challenged this resistance? But if this move is for real, we're going to close above 110 today, and I'm not so much concerned about the euro dollar. I'm actually, I was just showing, I just had it on my screen. I picked up some Euro Aussie and I picked up some Euro New Zealand down here today for a couple reasons. First of all, I think stocks are elevated, and we're near that 200-day moving average where I think we might roll over. So, what you'll see here in the Euro Aussie is we hit a new trend low and then we rallied. So that was this right here is a false breakdown, as you can see. Right. Euro New Zealand, false breakdown right here, as you can see. So now the risks of those pairs is for higher, in my opinion. Hold on one second. So the reason why I point all that out is because I think that the euro just came under some pressure here. Wow. What just happened with the euro? It just dipped all the way down. For why? Germany says host decides format of G7. That has nothing to do with anything. I think it was just a stop run. Hold on, I'm looking around, guys. Looking around, see what's up.
I don't see it yet.
I don't see anything. No, that's all new. It's all new, old news. That's what I'm looking at here. Huh. I don't know what happened, but it happened quickly. There's something on the UK trade deal. That Amanda is saying, because I don't have my squawk up right now, because obviously if I can't hear and talk.
Netherlands says EU stimulus negotiations will take time. Perhaps that?
Maybe. I don't think that would be what would slump the euro. I don't think, but let's see.
UK chief negotiator Frost says EU needs to evolve its position to reach an agreement.
Yeah, but what's new with that? I mean,
yeah, I mean, who knows? I'm just giving you whatever is out in news that might be relevant.
I mean, the euro, in my opinion, the euro will pop right back above 110 here. So, I think that was more of a just kind of a like it just took out some weak stops real quick, but it's interesting. Hold on really quick. Let me just, I'm just kind of clearing up some positions here. And what I'm trying to do is I'm trying to buy some euro sterling down here. Because I picked up a bunch. If you were in the ForexAnalytix chat room, then you knew that I was long the euro pound. I sold a bunch of it. I was long yesterday at the 89 and long overnight at 89 pence. I just sold a bunch of it at 89.51, and I really am trying to load back up on a dip, but I just don't know if it's going to happen. I mean, we're at the 618, so I'm going to wait for it. But that's what I'm paying attention to right at this very moment in time. I'm just trying to find a decent place to be adding to longs here. Okay. And for those of you guys in the ForexAnalytix chat room, just real quick, and if you're not listening in, which most of you are, covered New Zealand yen short 66 or 67. Oh wait. Okay. 6708. That's when we're in the chat rooms, you guys can see like passing along. Like Amanda just posted this chart here of that breakout. That's the S&P that's challenging the 127% extension. Chi was I don't know what she was talking about here. The pound. Okay. And then this is me from like the euro dollar. We're just talking about the euro dollar daily charts. Anyway, so just letting everybody in the chat room know what I was doing. Okay, so now I'm going to try to buy this euro sterling back here if I can get it at 20. Let me adjust my prices here. 20. Let me see if this is the high. Sorry, guys, I got to do a little trading. You guys got to bear with me. I'm not Dale. Dale is probably sleeping, so I'm going to look to get that at 25. I think. Okay, let's go back to the euro.
There you go, live trading.
Yeah, not
On
by
face.
design. Not by design.
I know.
One of the other things, and I want to tell you guys, if you guys are ForexAnalytix subscribers, you probably saw yesterday I put in a pattern in play long the U.S. dollar Mexican peso. I tweeted it yesterday, so it shouldn't be, even if you're not a ForexAnalytix subscriber, you shouldn't be too surprised if you follow me via Twitter. But let me explain to you the reasons why, and then I'm going to explain to you something else. Here's the U.S. dollar Mexican peso. Okay. Here is the daily chart. That's the 2017 high, right? This is the, oops, I didn't want to do that. Let me delete that, remove. Okay. So this is the low from February, right? That's the high. That's a 50% retracement. 50% retracement. This is the maximum triangle extension, 127% extension. So if we hit a breakout point, 50% retracement, 127% extension, do you know what that gives us? Anybody? Bueller. Do you know what that gives us? Bueller. Neil. God, I love it, Neil. Rick, very good. Confluence, triple confluence at that. Not only, but I have quadruple confluence. Do you know what my quadruple confluence is? Like, I know you can only see 1, 2, 3. What's my quadruple confluence? Anybody? Chi might get this. Chi in our chat room. Anybody else? Other than Chi? Niddish, you either? No? Tom Fitzpatrick from Citi Tech yesterday says we are short dollar Mexican peso 22.29 using 15% of capital. He's the best.
Contrarian indicator.
Big time. There's a few guys that are about as good as they get, and he's one of them. Tom Fitzpatrick. So whenever he puts out something, I always look at it and go, wait a second. So you're telling me that in the dollar mex here, after after we've dropped for 7 days straight, you're now going to establish a short? When we're falling into triple confluence right here. Now I may be wrong, but I'm willing to take the other side of that trade. And his stop loss, ironically, is right here, right here. So, I get why he's short with a stop there. I understand why a stop is there, but if I wanted to be short, I wouldn't be short after you're, way oversold. You've been dropping for 7-8 days straight. What I would do is I would wait for it to break here, squeeze everybody else out, then turn around and go short. And so that is my quadruple confluence. And, and on top of that, we have the S&P that is, we're challenging the 200-day moving average. Yes, we're above it right now. We're at the 127% extension. But if the S&P fails today and we close back below the 200-day moving average, I think the rest of the week is not going to be as fortunate as we are right now for bulls. We'll probably pull back a little bit. If we pull back a little bit, guess what the dollar Mexican peso does? Joe said, okay, now this is Joe. Do you guys know who Bloomberg Joe is? Whoops, didn't mean to do that. Bloomberg Joe, for those of you that don't know who Bloomberg Joe is Joe Perry, right there, right? Joe, if you go to videos or webinars, you go to videos, Joe is playlists. That's Bloomberg Joe right there, who's always on with the Chartrist, pre-pandemic anyway. That's Joe. Joe says, perfect contrarian indicator. He's so bad. I've been following him since early days at SAC. And so, for those of you that don't know, that Joe traded at SAC for many years, for 20, Joe, something like that, 20 years. Anyway, Joe's on our team. And he lives in New Jersey, and so many of you guys chat with him and know who he is. So anyway, yeah. So with the old Fitzpatrick on the other side of that trade, I feel even more confident from yesterday after picking up the US dollar Mexican peso. Now, what will get me more excited about this will be if we breach, let me move this. So if we breach 2236 or so, but you can see stocks are bouncing. So, this is not going to rally when stocks are rallying. It's just not. The fact of the matter, though, is the stock market continues to hit new highs and the US dollar Mexican peso is not hitting new lows. That's a very big positive plus for the trade that I'm in right now. So, anyway. All right, guys. Nick says, what are you targeting and what's your risk from the Euro Aussie and the Euro New Zealand longs? Not much, because I have very small positions, and I don't. Those are two positions that I don't want to extend longs too aggressively, unless I see the stock market moving lower. One of the things, and let's talk a little bit about the Aussie here and the Kiwi. So the Aussie just turned away from the top of its resistance zone. Now, if you're not understanding why things are happening the way they're happening right now, let's talk about the Aussie dollar. It's failing at this 200-day moving average. Okay, it's failing at the 200-day moving average, is also the top of the resistance zone. If you guys use ForexAnalytix, you got updated this morning that we are at the top of the resistance zone at 66.8. When we were at 66.70, we've dropped 30 pips since that update came out 2 hours ago. Okay, so it came out about right here when you got the ForexAnalytix update. We've dropped. Now, if you can see why we've dropped from there, this is the spike high from early March, right? 161% extension, overbought relative strength, divergent too on top of that. So the Aussie is under a little bit of pressure here. As long as the Aussie doesn't break above 67 cents, for me, I don't mind being long the Euro Aussie. And again, I think the Euro, as you can see, it just popped right back above 110. I think the Euro is a long down here. So Euro Aussies, Euro New Zealands, those are trades that, you probably want to continue to keep on the long side near term, right? So for me, as long as the Aussie, doesn't break out, or, the Euro would have to be above 110 too. But again, these are all, if you look at the Euro Aussie and the Euro New Zealand, these are all, that's a false breakdown. So as long as we continue to maintain that false breakdown, probably get above this trend line, then for me, I'd be targeting way back up here at 170-ish. Same with the Euro New Zealand. Euro New Zealand's not hitting new lows. So as long as it, continues to make headway today, then I think that those will be continued good counter trend longs, and stocks have to start rolling over too. That's one of the things that I want to make sure happens. Now, I'm going to shut up for a minute. I'm going to bring in my colleague Steven Stelios to talk a little bit about what's happening with the Euro and with the EU. So what do you guys think here?
Good morning.
Good morning.
Good morning.
Hi, everybody. My views, I expressed them in the chat room. First of all,
but this isn't the chat room.
I know. So I'm going to say them. I'm going to say them again here.
Okay.
First of all, the EU Commission is going to spend 750 billion, of which 500 billion is going to be in grants and 250 is going to be in loans. And my view straight away was, you have these European countries like Greece, Spain, Portugal, France. have they been fiscally prudent or not over the past years and decades? The answer is no. And now we're under very hard times, and they're basically giving away money. So for me,
what makes them different from the United States? We just gave away how many trillions of dollars?
You are right, and this is what every central bank and government is doing at the moment. Even Japan.
Right. So join the party.
Yes. So it's the same thing. One of the same. So throwing money at countries or member states that are basically spending it away. Are they spending it away in a good way? Mostly not. So, this is all very scary to me. And I made a simile in the chat room. I said it's like having a kid with a credit card and not enough money to fund it, and it just keeps spending and spending. And when things get tough, you just give it more money. So for me, this is probably one of the worst things you can do. But of course, you need to somehow solve this crisis, and the crisis requires money. So I understand why they're doing it. It's just that it's, in my opinion, it's just morally wrong. So, it scares me a little bit. But as I said before, it kind of has to be done to face this unprecedented problem. And you saw Japan as well. They approved a new $1.1 trillion, $1.1 trillion stimulus package. So it's just money spent left, right, and center everywhere on the planet.
Yep.
What does that? Yep. So what does that tell me? I think as in terms of markets, I think like we've said that pretty much every day here. I think real assets are going to continue to appreciate in the near and medium and long term.
Now, you say real assets, and I know when you say real assets, that means silver and gold and other assets too. But when you're talking markets, now we have gold, which this is my chart of the day yesterday. Gold has, we hit a new trend high. It was divergent. Now we're breaking like this upward trend line. And gold, personally, I think gold looks like it's going to pull back a little bit here. But what do you, I don't think that gold is going to be a major pullback. If I'm really thinking, out loud, gold's probably going to pull back to like the mid 1600s from 1701. That's not really a big pullback. You think about like from a percentage standpoint, that might be, maybe, 3 to 5% lower, but I think people are going to swoop up and buy the gold down there. And it looks like Dale's here, by the way, if somebody can help him out. So anyway, gold looks like it's going to pull back. Silver, silver still looks like it's holding up very well. So I hear what you're saying, Stelios. So you just think that gold and silver are going to be prices that you can just buy on dips now?
I do. It's not just gold and silver. I'm talking in general terms. I think, land, real estate, equity indices, they're just going to keep going. But the question is, what path do they take? And, we're seeing equities rallying on the back of all this because, it's just a whole lot of new money being pushed into the system, and the equities have to go higher. I still think they have a leg lower first, but in the medium term, I think they're going higher. So to answer your question, I think yes, on dips, I think gold and silver and any real assets really are a buy.
All right.
My humble opinion.
Very good. All right. Well, thanks for your thoughts. We all appreciate it. Now, as far as the European Union goes, though, but you see the reaction in the euro, and the euro's higher. Obviously, we're challenging the 110 level, and the 200-day moving average today. Does what happened overnight? And then I'd like to hear Steve's take on this too. Does it make you more bullish the euro and the European Union as a whole, or not? What do you think?
In the short term, yes, definitely.
Okay. And it's kind of like the opinion of the guys in my office are like, well, yeah, now I'm not thinking euro parity. I'm thinking euro, higher, longer term, like back to 120 versus back to parity type of situation.
Yeah, if
But
I had
that's
to
how
pick between one of the two, I would definitely say I take one, take parity out of the question.
Yeah,
For now.
same here, but as you know, I picked the same thing even before we got the news about the stimulus. I mean, you know, I was saying I was very, very skeptical that the euro can move to parity, regardless, very skeptical. Not
Yeah.
that it was impossible or that it is impossible, but I still believe, and I believed and I still believe that it's a low probability scenario.
You still think it's a low probability scenario?
To go to parity, yes. It's a low probability scenario, yes.
Okay. But you still think it is possible?
Yes, but I would give it like 25% chance.
Where prior to today it was higher?
No, more or less the same. I mean,
Really?
you know, for
Okay.
me, that doesn't change much. I expected that they're going to do something. Do I believe that it's going to be something overwhelming? Absolutely not. I mean, just compare. They're now discussing the possibility of 750 billion, and you know, it's still a proposal from the European Commission. We don't yet have like confirmation or whatever. They might water it down. But even if it ends up being 750 billion, in comparison to what the US is doing, which the Eurozone as a whole and the US are similar sized economies,
Right.
I mean, it's a fraction, right?
Right. Okay.
Thank God
Yeah.
that it's a
Yeah.
fraction. Yeah.
That's fair enough.
Yeah.
Fair
There are
enough.
many people, you know, don't stop to think for a minute what money is. Money, creating money or money is not wealth.
Yep.
Money is a claim to wealth. What is wealth?
I owe
Well,
you.
yeah, wealth is
But you know what?
products.
Before the debts
Yeah.
get paid, I'll be dead. So that's all right. All right. Well, hey, Steve Stelios, I'm going to pass it over to you. I'm going to get back to the market. I think Dale should be here any moment. So it'd be nice to have him back. I know he slept in a little late, and you know what? That happens. It's not like you know, any of us are shocked that something like that might happen. So and it happens so rarely. Dale's always here, so we'll welcome him when he gets back. But I'm gonna turn it over to you. If you guys have not tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days, so you can get all these notifications. Hopefully before stuff happens. All right, we'll see you guys soon. Thanks.
Bye bye, Blake.
Blake, thank you.
See you guys.
Bye, mate.
So, how you doing, Steve?
Good still. How have you been?
Good. So, so like we said before, a whole lot of new money being thrown at countries to combat the coronavirus global shutdown. We're actually slowly coming back into life, let's say. But as we've said before, clearly we need to see how things progress. And you know, there are already reports about places where economies have been opening up, and the number of cases, you know, trebling, quadrupling, etc. It's only logical that it's going to happen. The question is, how severe is it going to be, and will it be able to be combated, let's say, by the system? So that's. That was the main thing today, really, with the European Commission, and also, like we said, Bank of Japan pledging more money, and
For a change.
what else? There was something else I wanted to say. Can't remember what was it. There was
I think Japan has already thrown something like $2 trillion, you know, in the coronavirus economic impact fight. So, you know, trillions are now becoming the new billions, more or less, right?
Yeah. I mean,
looking forward to when they will find out if you add another zero, another 3 zeros. I mean, you know, you can get to a quadrillion.
I guess the difficult part is to stimulate demand, because you can pledge you know, funds to you know, for cheap loans, you know, towards businesses and this and that, but you know, you still have millions upon millions of unemployed people who not all of them are going to come back to the market straight away. And
yeah, you know something, Stelio, liquidity though, as recently proven once again in the case of Hertz, the rental car company, does not resolve solvency issues, right?
of course.
For example, the Fed had bought Hertz bonds, but that didn't really help.
Yeah.
I don't mean that it doesn't help. It actually helps in one way. It keeps zombie companies going because they can keep borrowing for longer when under normal circumstances the market would have already decided that the risk of lending to many of these companies is stupid. So under normal circumstances, when you have a free running economy, what happens is that once a company becomes more of a liability, more of a risk, what happens is, in essence, it's getting kicked out of the credit market simply because the cost to borrow becomes very high. Because, of course, whoever is lending needs to be compensated according to the risk they take. So now they've removed that, out of the equation. Of course, that in the long run, creates much bigger problems for the economy than it solves, because simply what it does is, first of all, it keeps companies in competition with healthy companies. It keeps companies that are not healthy competing with companies that are healthy just because they can, remain on the lifeline. Second of all, at the end of the day, at some point, these companies will fail. So, all these money thrown at them are going to be wasted. So, it's a circle of evil and moral hazard, and, at some point it will have to end.
Yeah, that's true. And, like I was saying before, the market is very quick to price a complete recovery. I'm looking at myself, for example. Actually, no, you have, like I said before, all these millions of people who are unemployed, and many of them will not go back to the workforce. What happens with that? Well, they're going to be spending pretty much nothing until they feel safe that, they have some kind of employment and they can actually afford to spend stuff. You have other people, like I'm looking at myself and my wife, we're both working, but now with the uncertainty, because you don't know what's going to happen in October, November, our spending, even though things have opened up, has gone down massively. So, and I don't think I'm the exception. I think the spending patterns are going to be much lower than they were before, not for days or weeks. I think it's going to be for months until we see what happens in, if there's going to be a second wave or, a vaccine or something like that, then people are going to start to become a little bit more brave, as in, on average. I mean, obviously there are going to be people
and Stelio, even if we assume the best, even if we assume that throwing all that liquidity will make the market rebound and consumer behavior return to quote unquote normal ASAP, even if we make all those positive assumptions, one fact will remain, that in a short period of time, there will be a huge increase in debt globally. Isn't that supposed to be factored in multiple ways? First of all, we know that an increase in debt means increase in servicing costs. So it is definitely weighing on economic activity and economic expansion. So, even if we assume that they succeeded in exactly what they wanted by exploding debt higher, that on itself should be very negative. But,
yes.
Yeah.
And that would take us, remember, that would take us back to where we were before the coronavirus started. So end of last year, which was a place, remember, the global economy was starting to turn, things were not looking very
The repo market was about to implode.
Yeah, and suddenly we're now, okay, we're back to normal, where normal is what? Great, we're expanding. No, we're not. So I think we're getting a bit ahead of ourselves.
Yeah, and as many people before us have said, even the term expansion is very relative, because why do we consider a 2.5%, 3% expansion as a positive expansion when, to create that, you need an expansion of debt at the same period of time of 5, 6, 7, 8%? So how is it expansion if, in order for you to create 2.5 to 3% of, GDP growth, you need to expand your debt at the same time at double or even triple the rate of that. I mean, how is that expansion?
Yeah. Anyway, as you can guess, I'm not very convinced about this. What the markets are expecting in terms of recovery. I hope I'm wrong. I've always said that, but I don't think it's going to be as rosy as that. So, and our friend DJ is saying, by and large, things won't go back to the way life was in 2019. And I agree. And a lot of the people I talk to, just like myself, we've changed our spending habits and the way we look at things. This thing, 2-3 months in isolation, in lockdown, you realize what you need and what you don't need. And is it a short-term adjustment? Maybe, but I know for a fact that I will not be spending the way I was spending before. So I just want to reiterate. I think the road to recovery is going to be much more bumpy than people in markets think.
Yeah.
Okay.
That's the case. That's the case.
Yeah.
Okay.
For some reason, Dale is having problems.
Yeah, that's why I wasn't talking too much. I haven't managed to follow all the chat. I don't understand what the problem is. I mean, he just has to follow the link he does every day.
You know what? Maybe I'll. I find a way. I've got a way for him to join. Don't worry.
Okay, if you can, if you're gonna attend to that, I'll jump on the charts because we talked about it yesterday. Seems that the euro wants to break out at the same time the DXY wants to break down. Of course, it's almost a perfect relationship. So euro USD, while Blake was talking, it dumped a little bit lower, but of course that was as Blake assumed. Probably it was like trying to force some of the very weak hands to get out. We're back again, testing this confluence of resistances at 110.10, 110.20, 200 daily moving average here as well. At the same time, as you see here, here's the DXY testing these triangles, trend line support. This is what I assumed, and I repeated yesterday. This is what I assumed a week ago, that might be the price action that's going to follow, and that's what we might actually see happening here. I do think that if the Euro USD closes above 110.20 today, there is a very good chance that it's going to squeeze higher in the days to follow. Now, the cable is stalling once again at this 123.40 area. So we still have this head and shoulders formation and the neckline and etc. I don't know how you want to draw it. It's a little bit tricky, but in any case, no matter how you draw it, perhaps we're just back testing this again. Also this support resistance area. So I would be a little bit more skeptical with the cable here than I would be with the euro if the euro closes above 110.20 on a daily closing basis, because that's a big if it happens, I think it's going to squeeze higher. Now, despite the euro being at the highs of the past roughly 2 months, the USD Swiss actually today jumped higher instead of moving lower. Why did that happen? The answer is because the Euro Swiss, we warned that breakout probably is showing that the path of least resistance is now higher, is because the Euro Swiss actually jumped higher today. So this move from the Euro Swiss, quite a big move for the Euro Swiss standards. I mean, more than a 100 pip move for the Euro Swiss is quite a formidable move, right? This move in the Euro Swiss higher is what actually kept the USD Swiss in this triangle despite Euro USD in essence breaking out. Okay, so given the recent move that we've seen in the Euro Swiss, and with the possibility of this continuing to the upside, and knowing that 105 is more or less like an invisible floor that the S&P has put in place, I think that if you want to be on the long side of the Euro USD, which under normal circumstances would mean being on the short side of USD Swiss, I think it's a better idea to stick with the Euro USD and be in the long side of the Euro USD, because if the Euro Swiss keeps pushing higher, the USD Swiss is not going to be moving lower as much as Euro USD is going to be moving higher. So that's something to take into consideration in choosing which of the two instruments you would rather pick if you actually want to be in the short side of the US dollar, right? So as I said before, I think you would rather be long the Euro USD with this breakout we're seeing in Euro Swiss than being short the USD Swiss. Now, another benefactor from the move we're seeing in the euro in general is the euro yen. So I wanted to show this as well. We've already broken out from, let me put it in another color, from this. You can see it as a descending wedge in combination with this trend line support. You can see it as a descending wedge, but we also have the bigger channel, which is in red here. So definitely that first breakout was a first indication that something is changing here. For me, the big test is going to be this confluence of resistances at roughly 119.60. It's the 61.8% fib and horizontal support resistance area. Also, this descending channel trend line resistance. So it's a triple confluence of resistances. The 50 DMA is just below there as well, almost a quadruple confluence of resistances. So, that's going to be the big test, because if we also bridge through that 119.65 area, I think we can be talking about a much, much bigger rebound coming here in the euro yen. Okay, so euro yen is another one to watch carefully. Of course, USD yen catching a bid would definitely help in that direction, and not only help, it could actually accelerate the gains from the euro yen in comparison to other euro pairs. But despite USD yen looking somewhat constructive, if you go to short-term time frames, so let me go, for example, USD yen here in the 4-hour chart. So here's the 4-hour chart. This is what we had drawn some time ago in the 4-hour chart, and it looks relatively well bid. What remains a fact is that it's still not a trend, right? You can see it here in the daily. In any case, if we do see USD yen pushing higher from this 108 and change previous high, at least this opens the door for a move towards 109, 109.50, and that would definitely help the euro yen overperform. Now, we talked about yesterday, among other things, about the Aussie and the Kiwi, saying that as long as
Hi, Steve.
Hey, Dale.
How are you, buddy?
Finally, welcome back to our company.
Oh, yeah, thank you for rehiring me on my birthday.
Oh, happy birthday. Okay, now we know. Now we know why you overslept.
Oh, yeah. I had a wild night in lockdown.
Yeah, partying yesterday, champagnes, I heard.
Yeah.
I heard it was the big event for Los Angeles, right?
Me, myself, and I went crazy last night. So anyway, I just want to, wish myself a happy birthday.
Happy birthday
to me. I just turned 43.
Liar,
happy
liar.
Birthday, dear coach. Happy birthday to you. I mean me. Anyway, I'm 43.
Dominic is saying 43. How many times?
1.5. Tell him 1.5, Dominic. All right, anyway, go ahead, buddy. Yeah, so, and then my email didn't work, and then getting in the meeting. That was my birthday gift, was technical issues. So, Yeah, I see. Nice post yesterday that
You're,
gold might be breaking
I
down.
remembered you're a Gemini, but I
Yeah.
didn't remember the date.
Yeah, I'm schizo. So,
Yeah, I'm 12th of June, so
all
I'm
right.
equally
Oh,
schizo.
yeah.
I
Yeah, you're
assume.
on the cusp.
Not
Yeah, all
really.
right. Oh, okay.
Yeah.
So I guess the feature today is gold negating the breakout and euro threatening a breakout. Isn't that
Yeah,
something,
Euro is definitely on the move.
Yeah.
Let's see if we confirm today by getting a close in the Euro USD above 110.20. I think that's
Well, I
going to be.
guess this answers, and we were getting some answers to this question last week too. Everyone that, all the gold bulls would say this, Steve. Can you imagine gold is doing so well with the dollar being well bid? What is it going to do once the dollar weakens? It's really going to be jet fuel. I guess it turned out to be just an alternative and not jet fuel. It gave people an alternative.
I think that for the time being, first of all, I do agree with the thesis that when dollar really turns lower, then we're going to see gold exploding higher. So I do agree with that.
Okay.
But we haven't seen the dollar really turn lower. I mean, we're still very close to the highs for the dollar. This is
It's right on that breakdown here.
This is
We'll
a small
see.
pullback for the time being.
Okay.
I think that the reason that both are moving to the downside at the moment, I mean, both the dollar and gold, is the fact that the market is in a risk-on mood and optimistic. So at the same time, you know how it is. Stocks get bid. The dollar is not acting as a safe haven, and at the same time, some people are like leaving gold in, thinking that its main function is as a safe haven currency. But gold's main function as a monetary metal is preserving your purchasing power. So people might not be realizing, but it's going to be proven over time, as it has been proven in the past, that central banks' monetary policy, which is a given, and it's not even going to be changing, is super bullish gold, irrespective in the long run of what happens with risk assets. Because it all has to do with inflation, as I was saying before very briefly, but
I'm just saying now. I mean, people they're getting what they wanted. A weaker dollar on the verge of a breakdown out of that rectangle, and so far, it hasn't been jet fuel for gold. So I just think people are scratching their heads a little bit. I think it's a big deal that we negated that breakout. I think it changes the character a little bit of the gold market. We had it in that triangle, right? And we identified the triangle. We said there was going to be a thrust to the upside, a terminal thrust.
We got the minimum target fulfilled, which is a higher high. We got that.
Yeah. Well, and it should not have negated the breakout of that triangle. There's something wrong with it. That's my view.
We might see a deeper pullback. There is no question about it. I mean, in the short term, it was, overbought, and also we know that sentiment had changed to quite positive. Having said that, as I said, I don't really see that it's easy for gold to go down in the long term. You know what I mean? I mean, well, I'm not, nothing moves in a straight line. There's no question about it.
No, 1350 is my longer-term target. I get to that by taking 1.618 of that $250 break we had. I don't know, a few months ago before the recent high when it, happened in a hurry. It wasn't the crash; it was before the crash, and so that's $400 from 1770, 1370 long term.
1370, 1360 is the big breakout area for this big triangle. I'm quite skeptical we're going to see these levels.
All right.
I'm not saying impossible, but I'm very skeptical.
Well, you know, I just thought on my birthday I would at least be allowed to do a nose for Pinkert.
Silver at the same time still doesn't look that shabby. I mean, for the time
silver
being,
looks great.
For the time being, this looks to me like a consolidation. For the time being,
like the S&Ps. Doesn't
it
look a lot like the S&Ps? It's almost identical.
The S&P is already above the triangle. You know, look at it, 3,033, and it's still going.
Yeah, I thought it topped yesterday. Yeah.
As I said yesterday, I wouldn't be surprised to even see 3,137, which is the 78.6. Yeah. If that happens, there is a good chance that the Nasdaq might even have broken out to new highs. That will be a nice divergence. Although it is worth noting, and I wanted to mention this today, given the fact that yesterday was a decent day for stocks, I mean, they didn't close higher, but the S&P was more or less unchanged, let's say. Yesterday, the Nasdaq, first of all, got rejected once again from this ascending wedge. Second of all, the candlestick that it formed is quite a bearish one. That was an outside black candle. So it was quite weird because
weaker today. Nasdaq's doing nothing.
Exactly. It's quite weird because we've gotten used to the Nasdaq for a huge period of time leading. Not only
it's going to lead the correction.
Not only US stocks, but you know, global stocks in general. Overperforming, I mean. And
all right, buddy, listen, Peter's going to be here in 8 minutes. I'm still kind of waking up. Why don't you...
Peter who?
Peter Goodburn.
Ah, nice. We're going to have...
For the interview, good. So I'm just going to take a few minutes to get the cobwebs out of my head.
How are the ladies saying? To powder their noses?
Yeah, I'm going to go. I did that in the 70s. All right, buddy.
Okay,
I'll be around.
Okay, Dale.
Thank you.
Somebody actually, now that we're speaking about the Nasdaq, and you might be interested about that, that was not my idea actually. Somebody showed it yesterday, a ratio of the Nasdaq to IWM. That's the Russell. So this, I found that quite interesting, the ratio of Nasdaq to IWM. Just look at this. Just look at this overperformance. I mean, that bottomed out in 2006 at 21, and this is unbelievable, right? And it exploded almost to, not almost, to 75, that ratio. Now, it is worth focusing, just look at that last explosive move higher. It is worth taking a good look at the more recent price action in this ratio, which is the Nasdaq, I repeat, over the Russell. Now, you'll notice here two things. One is the huge RSI divergence, huge, right? The second one is this. A potential topping formation here, right? So I found that I briefly, you know, saw that passing through my timeline in Twitter. So I unfortunately don't remember who noticed that to give him credit. It wasn't me. But yeah, I mean, it looks very interesting to me. So you know, I'll be paying attention to this. So since we were talking about the Nasdaq and the fact that it's peculiar, but it has been underperforming during the past couple of days, you know, I just wanted to show that. Now, the S&P next upside targets, by the way, from an Elliott wave perspective, an interesting target is 3,050. It's the 61.8% fib extension from wave 1. From this move higher, projected in wave 5. If you don't understand, doesn't really matter, just take it into account, 3,050, 3,051. The next upside resistance is that confluence of resistances, you know, close to 3,140. I still expect that this rebound is going to fail, and we're going to see a deep pullback, at least a deep pullback, before we see higher prices. So I expect something like that, right? Now, it doesn't mean that we're going to make it to 3,137, right? The line is indicative. In my opinion, we've already fulfilled the minimum expectations. So in my opinion, we might fail anywhere between here and there. So just, you know, letting you know. Now, let me go through some of your questions, since we don't have about 5 minutes and I don't want to eat from the, you know, Peter is excellent, and, you know, you should stick around with the interview. It's not by accident that we had him as a guest in the Traders Summit. Hi Steve, if the S&P 500 starts to journey to the south, what will happen to Euro USD? Would this go down together? Listen, if we see a move lower in risk assets, the dollar will be benefiting from that. So at the very least, I would expect that the euro will have a much harder time moving higher. Let's just say it like that, okay? Now, it is not impossible to see euro remaining like stabilized, but definitely, risk off should be for the time being a tailwind for the dollar. So, you know, that's definitely not going to be helping the euro USD. Okay, so that's that. Steve, does the same logic for the euro USD versus USD Swiss apply versus the USD MXN? No, because what I'm not sure when you mentioned that, if you're talking about me preferring long euro USD instead of short USD Swiss, that had purely to do with the way the intermediate pair, which is the euro Swiss, will affect the inverse correlation that those two have. So USD MXN is in no way related to that one way or another. I mean, the euro Swiss cannot affect the USD MXN in any way, as it does affect the USD Swiss. Okay. My pleasure. Many happy birthdays to Dale. Where is Greg? He said Euro Swiss will fail in Twitter this morning. Any update on that view? No idea. Haven't seen that. And it might still fail. I mean, it might still fail from here. There is a chance, because I guess if we had Gregor here, and I don't want to be answering for him, but he could easily tell you, and that could prove to be the case. In my opinion, there's a high chance that it has already bottomed. Let me make that very clear, right? In my opinion, there's a high chance that it has already bottomed, but there is still the possibility that this is just an ABC here, right? You can, with a projective target of 107,350. Now, I believe there is a high chance that it has bottomed, because I know that they want to keep this floor, the 105 floor. So against 105, and the closer you are to 105, you have S&B, you know, taking care of you, you know, having your back in essence. Even if Gregor is wrong, though, and I haven't seen the prediction you're talking about, that doesn't change anything, because we are in a business that if you're wrong 40% of the time, you know, you're doing great, as long as you also apply risk management, of course, right? So if you manage to be right even 55% of the time, and you apply proper risk management, you're going to make a profit. So, you know, I don't know if you're trying to be like, you know, if you're right, Gregor is wrong, but trust me, it has happened many times, and that's no offense to Gregor or myself, because as a trader, you need to get used to being wrong frequently, right? The question is, how frequently is frequently? So I don't really care if I'm going to be proven right here, or Gregor, if, you know, the case is what you're mentioning, because I haven't seen what he tweeted, but neither Gregor or I care, right? Because at the end of the day, what we care about is our P&L, and that doesn't come out from one single trade, in which case, by the way, I don't know even if Gregor has a position here. I don't. I mean, I'm making here an observation.
Steve, this is Steve.
Yeah.
This is just a case, and it's breaking one of the rules of any room that I facilitate or host. I only have two rules: show respect for people and our guests, and don't take any pleasure out of seeing other people fail to rationalize your own inadequacies. So a lot of people spend so much time going, oh yeah, he's supposed to be an expert. He was wrong about this. He was wrong about that. Yep. Use all that energy into your own analysis. Go ahead.
Plus, since we're talking about Gregor, I've seen Gregor's P&L.
Yeah, look, yeah.
Yeah, so I can guarantee for that on a personal basis, but I can't for every person that is writing something here. You know what I mean?
Yeah, I know.
So it's easy. It's easy to write something. I know that Gregor is a profitable trader as a fact. End of story.
So I vote that we ban FX Trader from Face for 1 year based upon this behavior. What do you think, FX Trader?
Nah.
Everyone loves you here but me.
I'm not. So, I'm not in favor of censoring anybody anywhere.
I know.
As long as they're not swearing or being really offensive.
Peter Goodburn is in the house.
Perfect. Going to be great. Hearing what he has
he
to
could
say.
update us from his great presentation he did at our. In fact, you're going to have to promote him. It looks like. Steve.
Absolutely. Let me find him. Wait.
Get an update from his great presentation at our summit from a few weeks ago.
Okay, found him, promoted him. I'm unmuting him.
Hey, Peter.
Can you hear me?
Got you, buddy.
Oh, great. Good to be with you. Hi, Steve.
Hello. Hi, Peter. Nice to have you with us again.
Great. Thanks for inviting me as well. Thanks. Hi, Dale. And did I hear someone say it was your birthday just now?
Yeah.
Oh,
you're my birthday present from the company.
Hard luck.
Huh? Yeah. So I mean, what a gift to have some, your conviction about being a dollar bear has helped me out since the summit, and we're knocking on the door of it maybe beginning to break down in the case of the dollar and break out in euro. So if you can share your screen. Yep. We'll just move ahead with almost everything you said at the summit is manifesting.
Yeah, okay. Yeah, we can do an update of that. Do you need to, let me just see.
Steve needs to stop sharing. There you go. And now you share your screen.
Let's see if I can do that. Share screen. It should be, okay. Screen number 1. How's that? It should be coming up. Right? No.
Yeah, we can see you.
Okay, that's the Nasdaq, I think.
So start wherever you want, but here's my key question. I was talking about this with Steve. Peter, a lot of people said, God, gold is doing so great with the dollar being bid. It's going to be a rocket ship when the dollar begins to weaken. And the dollar's been weakening, and I don't know what you're thinking about here in gold, but we had that little wave 4 triangle that we blew out of to the upside, and since then have negated that breakout. And I'm wondering if this might be changing your view on gold, at least short term.
Okay. Well, as far as the dollar's concerned, we're really, we're set to really accelerate down hard this year. The timing is being delayed because of the impact of the coronavirus. We've seen a lot of hedge funds and investors pile into the dollar as a medium of safe haven, and it's really delaying the process a little bit. And I heard Steve's comments just now, and you were saying, well, the dollar might just have a little flip up if the stock market drops. I believe the stock market is already dropping, and we'll have a look at the Nasdaq in a moment because that's really fun to have a look at. But I think with stocks about to begin a more widespread correction.
Peter, do you think that was, since you mentioned it briefly, do you think that was an ending diagonal in the Nasdaq?
Yeah, that's what I think. You probably come up to the same conclusion then, because I've got it as a fifth wave from here. This is the mid-April low. This is a fifth wave as a diagonal. And I had a target at 96.16 as a measurement. And we got to 96.04.
Almost perfect.
yeah, just a few pips away. And I had a quick look this morning at that decline, just to see if there was any indication that there might be a five-wave downswing from that high, and there was. So it's not surprising that in the last hour we've just seen the Nasdaq drop again after a little bit of a counter-trend rally overnight. So that's all setting the stage for quite a big downswing. And I think if we get down to, I've got a very sort of normalized correction to 83.43. That's a 38% adjustment, and I mean that's about 14%, I think, roughly around 14% down. So that's quite significant to get trading. I mean, certainly our clients who are sort of basically exposed on long only funds or whatever would normally be doing some hedging on a 14% downswing like that.
Okay.
So you're right, Steve. It does look like a diagonal, and that we're going to start to drop down. And I was just looking at how the dollar's impact would be, because ordinarily I'm pointing an arrow down here in the bigger context, but there could be a little flip up, and that's what I'm really waiting to see, because I won't be going short the dollar. Whoops, hold on. I won't be going short the dollar. I've got this on another page. I just need to switch it across a bit.
You could use euro as a proxy if you want.
Yeah, okay. I've prepared this dollar index chart to show that if we hold above 98.65 today and the stock market drops quite rapidly, then we could fall back inside the range. So you've got to be careful about that. I must admit, even if we break that low, I'm not entirely sure if we begin an immediate acceleration down. I don't think we will. So it's then a question of selling three-wave rallies into the dollar, this type of thing.
Okay, so this a lot of things are predicated on this correction we're going to get in equities that's going to create a bid for the dollar. I know that you thought yields had bottomed, and I was looking for higher yields over the past 2 months with the rally that we had in equities, and how disappointing it just never happened. So you think we could go down to, what is that, 47?
Well, it could drop down to 47, 48 basis points. Yeah, it could do. I mean, it's a bit flip-floppy, isn't it? The advance from April's low.
But it didn't perform with risk on for the last 2 months. That's what gives me pause right here, that I'm early.
That's right. Yeah, I mean, with all the risk on, you think that the yields would have pushed on a lot steadily. Yeah. But this, I mean, it should have really sort of evolved into a more neater five-wave impulse, from 54. That was the mid-April low. We haven't seen that. So, yeah, I think that there's some funny things going on because, of course, governments are issuing a lot of debt at the moment. And, we're waiting
a little bit.
Yeah, we're waiting to see.
Everything with a T instead of a B now.
Yeah, we're getting used to that, aren't we? Which is a bit mind-boggling. But if I was speaking to some investment banks just yesterday morning, and they were saying, well, look, if the ECB, for example, are pushing in so much more bond buying, at some stage this is going to have an impact on yields and sending the yields higher, because it's going to be, if you're making issuance, you're going to be raising money, and that's going to put more pressure on raising money. That's going to rise the yields to the upside. And we have to be a bit careful that we're fixed on the correlations, where normally if a stock index will go through, maybe a 3-4 week correction to the downside, and we're used to thinking that yields will come down as well in a positive correlation, that's sending the prices up. That might disengage at some point. So we've got to be very, very careful about that, because there's traps involved, especially if the funding is rising. and we're seeing that certainly from the ECB as well as the Treasury in the US.
Okay.
I agree 100% with you, Peter. I do believe that at some point this relationship is going to perhaps even invert.
Very easily, couldn't it? Yeah, I think that that's decidedly possible, and so we've got to be very careful. I think the yields in Euroland, which we're monitoring with we're monitoring with the Italian yields. This is a really fun thing to do because at the moment this is the Bund yields traded in Germany, and you can see they're inching up. It's a similar sort of very etchy sort of advance from sort of the end of April upwards here as well, but it could explode to the upside with all this funding around. But on the shorthand note, yeah, just be aware that if we start to get more downside today and tomorrow on the US markets, on the indices, S&P and the Nasdaq, just look and see how the behavior is working against some of these bond prices. If the bond prices are starting to rise and the yield's dropping downwards, then we can maintain that correlation for a bit longer, but not indefinitely. At some stage, these yields will have to explode to the upside. They'll have to.
Okay. So what else did you have in mind for today before Steve and I started?
Yeah, well, I was looking at a few cycles and stuff because I just wanted to reiterate from when we looked at things on this post-coronavirus presentation I made a few weeks ago that the S&P trends, the cycle is still up. I mean, I know that there's a lot of contention because we've seen just this week the Bank of America Merrill Lynch Global Fund Manager Survey come out, and they've said that 68%, I think it is, of global fund managers think that we're still in a bear market rally from the March lows. But of course, we've been saying in the presentation that we made 2 or 3 weeks ago that that wasn't the case, that we've had everything lining up to show that major lows occurred in March. These were corrections mostly from the January 18 highs. And you can see on this particular cycle that we've got January 18 marked up here. And the cycle started to turn down. And it only, of course, bottomed in March, funny enough. So all the while we've been moving down and moving up into higher highs. This is, from an Elliott wave perspective, part of an expanding flat pattern. The cycle doesn't really show that intermediate sort of rally because it's so long term. It's a weekly composite. But of course, we can see how the pattern subdivisions are working to try and forecast something like that. But the cycle has bottomed, you see. So this is now turning up until we get to something like the end of 2023, early 24. So there's no doubt in my mind that we're on the right side of things in the bigger context. So that was just a quick update of one of the cycles. And then I think I did a cycle on the dollar. This is a composite daily cycle on the dollar.
Yeah.
Now we know that there's a 7.8 year grand cycle decline on the dollar index, which is peaking back in up here. Actually, it's in towards the end. It's the last quarter of 2016, first couple of months of 2017, and that's what this is picking up as well on a shorter term basis. But you can see the rhythm is mostly good in this. I don't predict price from the red cycle projection because this is only 2 elements, which is timing and direction only. It's not amplitude and it's certainly not pattern. So those 2 other aspects are dealt with bid price ratios and the Elliott wave. But overall, when you look at the overall decline like this, I mean, we're eating time basically before we get this acceleration down. And then it lasts right the way through this year and into next.
So maybe what you're looking at here with your July 20 peak on this cycle, it's already almost June that we get this correction in the S&P time-wise. Maybe it's ABC into July, and the dollar rallies with the correction in the stock market into July. So am I interpreting it correctly that if the dollar is strong into the July timeframe, that would be a great shorting opportunity?
Absolutely.
July 20th? Okay.
No, absolutely, Dale. You're interpreting it just the way I see it, and that is that if we did get the dollar somehow going bid again with the stock market correction to the downside, then we are set up for this attempt at up into the end of this month and early July. So if we go back to the dollar index again, just to refresh everybody's memory, we're talking about then something like this, up to 101.96, something like that. I mean, that's why even if we break 98.65, I'm a bit reluctant to sell the dollar at the moment because of that. I'd like to see how it's behaving, just as much as we're looking for behavioral guidelines in the yields. I think we just need to be a little bit careful here. It's not an outright sell signal just because we're breaking down here at the moment.
Okay.
One other thing which I thought was interesting from a bigger perspective, I'm not sure if I don't think I showed this in presentation a couple of weeks ago, but something that's intrigued me, and we had some customer requests, particularly on the energy front, to update this XOP. This is an ETF on the oil and gas index. And it's a rather intriguing pattern. I think that we've used our own special way of using Elliott Wave to come up with this forecast, because I think most Elliott Wave practitioners probably wouldn't see this pattern. But we have a certain way of building these types of patterns with fib price ratios, and we came out with this idea that the oil and gas index on a longer term basis is trending up. And we wanted to see how that looked, given two things. One, the collapse in oil prices that we saw in April, and how would this verify a more protracted upswing over the next couple of years in this sector. And it does, because we can see that this pattern from up here back in 2015 at 336 is developing downwards into what we call an ending diagonal. And it's a 5-wave picture. So we go 1, 2, 3, 3 in April, 4 up here like this, and 5. Of course, wave 4 has to burn some time, because otherwise this pattern doesn't work. And it must burn time. And what we used was a fib time ratio overlay, which is something I don't normally use day to day. It's something I use only in 2 circumstances of patterns. One is triangles, which are corrective by nature in Elliott Wave terms. And the other thing is ending diagonals, whether they're contracting or expanding types. And it sometimes works pretty well. And so I applied it here. And what was intriguing was that it gave us a 4th wave rally into September 22. So if anybody's listening and would like to sort of put that down in their diary, it's an intriguing date that we'll come to later on, because that could be a terminal high, at the least earliest time for a terminal high in the secular bull uptrend for stock markets as well.
Interesting. Okay.
So that was something which I thought was a useful take home to show today.
Thanks for sharing that.
Yeah. And of course, when we come to things like, most popular things like gold, where are we in gold prices at the moment? Well, I've long since been sort of an advocate to expect gold prices go to record highs at some stage in the future, because let's actually have a look at this long-term chart, because basically back in 2016, when gold mining stocks bottomed, and we've been tracking in 2015 a low on things like Newmont Mining, and in those days Gold Corp and some of the others that got basically consumed within Newmont and Barrick Gold since. They were all bottoming in 2016, and we could see that bottoming formation in 2016 on the gold miners was actually ending expanding flat patterns that date back to 2006, 2008. And that evoked the idea and the concept that a new bull market would eventually unfold over a decennial period, so that's 10 years or more, and eventually trade into new record highs. And on some cases, where Newmont Mining bottomed around, I think it was $15, we're talking about an ultimate upside target of 166. So that just goes to show just how bullish we were. And that forecast is still in play. And if 166 on those multiples doesn't get gold into new record highs, then something's really wrong with gold. But I suspect probably what's happening is that we're seeing a moderate 5-wave advance from this 2016-15 low, and that we've either finished primary wave 3 now, or we're about to see it finish. I can see today I had a very, very short-term downside target of 1703. And I can see that we've just nudged below it. So I might come back to that later tonight because I'm updating it for our report tonight.
Okay.
And I might turn really bearish now because, and that means just lowering wave 3 down to this price area here, because that's looking as if a 5-wave pattern up from this August 18 low is completed. And that means a multi-month correction to the downside, which will probably look at something like this, at least a return back to wave 4 preceding. So
okay.
we could be
wave
looking
4
at
is 1450. Okay.
Yeah, 1540. So that's
would the line in the sand for the bull case in gold be, say, the classic conventional technical traders had that breakout at 1360, 1350. We should not see that again, or maybe the bull market is over.
Well, I know that there's been a lot of debate on gold, and some Elliott practitioners have said that, well, hang on, this is only 3 waves up. We could be looking at a secular bear downtrend still, and I do sympathise with that. I just think that one of the key factors that probably means that we're in a bull market and eventually go to record highs is the fact, which would eliminate 1300 and things like that, would be the fact that
the dollar.
That silver, which is also very fascinating. I mean, silver bottomed at 1164. Let's have a look at silver here for a moment.
Yeah.
And when we did trade down to 1164 in March, we completed a double zigzag downswing from this July 16 high.
Yeah.
And that was a 38% extension below the preceding upswing. And these are really sort of important measurements that define the pattern as well as a double zigzag. And that means that it's impossible for silver to engage in any sort of bear market for some foreseeable time in the future. And I think that this double zigzag downswing is the second sequence of an expanding flat pattern. And the last sequence, the third and last sequence, demands a 5-wave advance to about $25. So I think that that's probably where we're heading to over the next 2 or 3 years. As the dollar collapses, we get a commodity spike to the upside. And silver, in this condition, you won't see gold trade down to 1300 anymore. That sort of possibility once has been removed off the table.
Okay, so we're set up for a wave 2 correction, price-wise. Time-wise, it looks like this too could be a June, July setup. You're looking for under 15 for the pullback. You have any fib retrace levels for, this will be the last bus stop. So, okay, around $14, a little over.
Yeah,
14.
I think, well, that's a 50% retracement. Why not?
Yeah. Okay.
Silver's been trading, the gold-silver ratio has been out to about 120, I think, and it's contracted since to about 100 now.
Yeah.
I think it could widen out again a little bit during this phase, but probably won't widen a lot more anymore. I don't think so. I feel that when I looked at the gold-silver ratio the other week on the long-term basis that it's probably hit a top now, and that's certainly the case on platinum. Don't know if anybody's listening in today.
Yeah, Steve Volge likes trading platinum.
Okay.
He's a platinum bug.
Yeah, well, I mean, I'm a big buyer of platinum and have been since the low was met, because winding the clock back to pre-collapse in March, we had a downside target from 1,000 on platinum to
800 is nice support. Since you mentioned it,
800.
Yeah, 800 is a nice support.
Steve trades palladium too. All right, so you're getting, there you go.
Yeah, okay, yeah, 793. That would be an interesting number. So around Steve's level 800 is going to be a certain short-term downswing to that. I think I used that by extending this by 61.8. Let's just check it, but I think that's correct. And if we then take a pause, we might end up a little bit lower. Yeah, so that's how that's derived, just by extending it by 61.8. That's just a tip for anybody listening in for measuring a zigzag. But generally speaking, this low down at 562 was a de facto low. And if we go and look back at the biggest long-term sequence, I think we've got something like this going on. So we're going to be going up to, I think we could be looking at some really significant advances in platinum. So if we go back to something like gold, which of course is in the news every day, should we be buying gold over platinum? No, we should be buying platinum over gold in this run.
You know, for most of my career, platinum traded at a premium over gold.
And because you and I are not so dissimilar,
old guys.
It was the same for my period of time as well. Unfortunately, I probably shouldn't admit that.
And you know, the gold silver ratio used to be 40 most of the time.
Well, yeah, I mean, that's right. So, and going back to ancient history, it was about, I think, something like 15, wasn't it, in ancient history?
Yeah. Well, anyway, so you know, it's going to regress to the mean, just so that we could be, you know, so we can kind of, what's that called? Reminisce. We could reminisce decades prior. So,
well,
anyway.
Yeah, anyway, I think platinum should be looked at, and you know, I think that's really, really exciting stuff. And I'm just going to have a quick check on the S&P. Yeah, it's still trundling off a little bit here. Sorry, the Nasdaq, I mean. So yeah, that's everybody keep watching that this afternoon, because I think that could start to fall down pretty quickly, and then we can check the dollar.
All right. Well, Peter, thank you. How do people follow you and subscribe and?
Right. Yeah. Let's.
Because you're not that active on Twitter, so people, you know, everyone looking for things for free, but yeah, you do have quite a reasonable price structure for your stuff.
Thanks. Thanks, Dale. Well, if anybody's listening in and you're intrigued about some of these forecasts, you can catch up with us at wavetrack.com, which I'm showing as our main first page. And if you just go to registration and subscriptions and hit subscription, the first subscription is for the Elliott Wave Compass report. That's a really good twice a week publication. And you can go online and see the charts online as well. Plus, you'll get a PDF in the post, the electronic post. But it's $39 a month, so it shouldn't break the bank. And we'd be very happy to welcome you to join and subscribe to that.
Thank you, Peter.
Thank you, Peter.
Thank you,
It
Peter.
was a pleasure.
Yeah, good stuff, man. So everyone, that's my trading warrior brother, Peter Goodburn. And he's part of my intelligence gathering, and appreciate your work, Peter. And it was a very nice birthday gift for you to share all your analysis with me and our community today. Thank you, man.
Great. Thanks to you guys. Thanks.
All right, everyone. So that's a wrap. I promise to get up in time tomorrow. Thank you, DJ. It's great to be 43. That's all I can say. At least I'm not saying 39 like Jack Benny used to for the rest of his life. But yeah, so 43, I can't go out and sing karaoke because, you know, we have a pandemic.
I can still claim 39 for a few more days and be honest about it.
Don't rub it in, man. All right. So anyway, don't just count your pips, count your blessings, and living another year, and, you know, sharing everyone's great work, our guests, the team, and a few of my guesses. I'm very grateful to still be here on bonus time. So thank you, everybody. Have a great day. We'll see you tomorrow. Thanks again, Peter Goodburn. Steve, thank you very much.
Thank you, Coach, and happy birthday.
All right, thank you, Guy. So we'll see everyone tomorrow. Adios.